Hey friends, finally it has happened. Christmas is coming early, it seems, with my favorite core value dividend stocks going on sale. There are 3 stocks I want to discuss today. These are 3 stocks I have not discussed in a while. I am adding these to my 2025 watch list to add to these companies in the coming days, weeks, and months. I am thankful as a dividend investor when the stock market corrects and when my favorite value stocks go on sale. Right now, value stocks seem to be out of favor. Investors are overlooking value stocks, PE ratios are going down, starting yields are going up. I love this scenario for myself because I invest for dividends, for cash flow that I can use to pay my bills. I earn cash flow from my dividend stocks while I'm sleeping at night. Now, over the last few videos, I have discussed 2 stocks already that I plan on buying, that I have been buying. My patrons already know this. I have been buying over the last few weeks, months, and I'll continue to in the future. These stocks are Pfizer and the ETF SCHD. Now, you also probably know I went really big on Altria over the last year as well. But I want to start with this because Pfizer and Altria, these are not really core positions to me. Pfizer is an ancillary position. It's very small in the portfolio. Over on Corner Patreon, which I'll link to in the pinned comment, I just did a portfolio update with the percentage allocation to all the positions. Pfizer is very small. Now, Altria has become very big, very, very big. It's now my number 3 largest position, but it's not a core stock per se. I don't really want it to be there. It's there because I need the cash flow from it, and it's done so well. These are great stocks, but they're not core. If you've been following my channel for a long time, you know that I am a core stock investor at heart. Why is that? I like to sleep well at night. I can sleep well at night when I am buying the types of positions that I'm going to discuss today, and SCHD. SCHD is about as core as it gets, as quality as it gets. I sleep well at night because of the diversification, because the algorithm works in my favor, and because it is growing the dividend on average over the last 5 years by about 12% per year. SCHD is core, but I'm just trying to say Pfizer, Altria, they're great. I own them, but they're more ancillary, especially Pfizer, because they contain risks. These are not stocks that are necessarily the most core sleep well at night stocks, but I own them because they do quite a lot for my cash flow. Anyway, I want to go into the 3 positions that I plan on buying pretty quickly here in short order. And the first one I am so excited about, probably the most excited of the 3, because strategically, I want it to be a lot bigger. And so let me start with that. It's Realty Income, ticker O. As you can see on the screen right now in front of you, so it's rallying in real time. When I pulled the data just yesterday, it was like at 52. Now it's rallying up to 53.46 price per share. But look, it's still below $55. For me, below $55, I plan on adding to Realty Income. This is my number 9 largest position. I'd love to see it maybe in the top 5, top 7, somewhere around there. It's off the 52-week high. Here's what I really love about Realty Income. Adjusted funds from operations on the low end of the range the company has provided for 2024 are estimated to be $4.17. Now, if I take the PE equivalent for this REIT, Real Estate Investment Trust, which is the price divided by that AFFO estimate, I'm getting a PE equivalent of about 12.82. I think this is a very fair price for Realty Income, and of course that starting dividend distribution yield is 5.93%. Now, that is not a qualified dividend. This is generally treated as ordinary income and some return of capital as well. This is 5.93% though. This is really meaningful for me, and they're growing that distribution on average by about 3% per year when I look at the last 5 years on average. The market cap of this company is $46 billion. This is about the strongest REIT that I know of. I love this REIT because it pays me monthly, and I am actually using funds from Realty Income right now to help pay bills, to smooth out my income. I see it every month. It means a lot. Here's kind of a side note. When I was younger in my dividend investing days, I kind of didn't really care, was it pay monthly or not. But these days, when I'm actually using dividends, it can really help with the budget when you actually have that income coming in monthly. Because yeah, if it comes in quarterly, you can always partition it out and kind of smooth it out over the months. But life doesn't always work that way. It's easier when the stock, or the REIT in this instance, does the budgeting for you. But let me keep going. As you can see on the screen in front of you right now, I have a few notes about Realty Income. So Realty Income has 15,000 plus properties. I love that their portfolio occupancy is above 98%. And even in the worst of times, I looked at the great financial crisis, I looked at the pandemic, it didn't look like the occupancy ever really dipped below 96%. And so they are really good about occupancy. It's a triple net company. This is the monthly dividend company. What I love about Realty Income is just the built-in diversification. One con with this stock that is concerning some investors. The stock is trending down a little bit, as is the overall market. It's probably just caught up in the market right now. But specific to this company, they have 3.3% of their portfolio concentration in Walgreens, and Walgreens is not doing so well. And so that could be adding a little risk, a little pressure to this company. But anyway, even during the great financial crisis and the pandemic, the occupancy didn't really dip too much. I think they will figure out the Walgreens situation if Walgreens has to vacate some of the stores. I think they'll be able to backfill with another pharmacy. And so I think they will be just fine. But some investors are concerned right now about Realty Income. At a very high level, why do I like Realty Income? I kind of look at it as somewhat of a longer term alternative to Treasuries, and it has a higher starting yield than Treasuries, and it has built-in gains with the 3% distribution growth per year on average. And so I like to look at it that way. I also like to look at it because they're so well diversified by tenant, by geography, by type of client, that they can kind of weather almost any storm, and I think they can stay out of a lot of the drama. So the next two stocks that I'm going to share with you, they're actually caught up in some drama right now. That's why these stocks are trending down, in my opinion. Realty Income, it kind of stays out of that. It stays out of some of these newer dramas that are coming to the stock market, and I like that about Realty Income. That's why I listed it first. And so now on my buy list, I've got SCHD, I've got Pfizer, I've got Realty Income, but I have two more that I want to share with you. And so the next one shouldn't surprise you at all. It is Johnson & Johnson, as you can see on the screen right now. This used to be my number one stock. Now it is my number two largest position. It kind of goes back and forth between 1 and 2. It has fallen 13.9% from the 52-week high. Hence, it has kind of corrected a bit. It's my number two largest position. I love the fact that the forward PE is in the 14s. This is a value range for J&J. The fact of the matter is the starting dividend yield of 3.41% is very meaningful, with a payout ratio below 50%, with a 5-year dividend growth rate of 5.47%, which honestly is respectable in our current times where dividend growth rates have in general slowed down a bit. I am happy to add to J&J here now that it has finally corrected. And here's what I like. I have some notes there. I like the low PE. I like the high starting yield. I like the solid dividend growth rate, as I mentioned, in this environment. It's a true core holding for me. It's sleep well at night. I never worry about this one. Why is this thing down? I think it is down for the reasons that Pfizer is down. It's down because of the RFK Jr. risk. The market is pricing these big pharmaceutical companies down in share price because they are worried that RFK Jr. and team may come into the White House and may just change things up a bit with the pharmaceutical industry, make things harder. But honestly, what I've come to realize is there's always going to be change. Our world will always be in flux. I think Big Pharma has a lot of lobbying power. I think they will be just fine. And all of us need the medical solutions that companies like Pfizer and J&J provide. I think they will be just fine. I think they will be able to get through any storms that come their way. And I'm happy to buy when the share price is lower because I get a higher starting yield. I get more cash flow right away that I can use to pay my bills. And so the last stock is going to continue on this theme. This one probably, again, shouldn't be too surprising for all of you. It's PepsiCo. As you can see on the screen in front of you right now, PepsiCo is actually now surprisingly, it used to be like, I think my number 3 largest position. It's now my number 5. My top positions, my corner patrons know, I'll link to this in the pinned comment below. They've switched around a little bit over the years because they've been disrupted a little bit by just how well Altria did, but also just some other stuff going on up there. So anyway, PepsiCo is my number 5. I'd love it to go back to the top 3. These are always fluctuating just because share prices move, but it's down 16.6%. And it's down again, I believe, one, because value is out of favor, which I love. I'm fine for it to be out of favor. Look, when I buy stocks, I never plan to sell. I love seeing capital appreciation because it makes me feel good about my portfolio value, but it is just irrelevant to what I do. What I do is investing for cash flow, growing streams of cash flow. That's what I use to pay my bills. I can't pay my bills with stock price. I don't sell shares. And anyway, so if PepsiCo is down, I just love this. I love seeing this, and I hope it stays down. I hope it goes lower. I hope it stays down for a long time. But as you can see on the screen in front of you right now, and I want to share a few stats. So the PE on a forward basis with this one, it's kind of the most expensive of the bunch. It's at an 18, but this is low for PepsiCo. The starting yield, it's similar to J&J. It's just a little higher at 3.54%. Payout ratio is lower than what I'm used to seeing with PepsiCo. It's at 66.5%, which should give it room to do another large dividend increase next time. The 5-year compound annual growth rate is a stellar 7.25%. If I can see them just kind of keep that up in perpetuity or for at least another 5 years, it does wonders for my cash flow, and it turns a starting yield in the 3s into something a lot bigger, especially with dividend reinvestment on as well, which I do have on for this stock. I love the low PE ratio. I love the high starting yield. I love the extremely solid CAGR. Siete acquisition is huge. They do have some healthy foods in their portfolio. It's a true core holding. Look, it is down again. They think RFK Jr. is going to come after all of these companies. Maybe he will, but in addition just to lobbying power, I think things in our real world move slowly. And I think PepsiCo is ahead of anything that could come their way. They acquired Siete. They're moving towards healthier options. PepsiCo's got this covered. I'm sure they've been thinking strategically about things, and I'm willing to take the conscious risk. Here's the deal with stuff like J&J and Pepsi that are down because of the RFK risk. The risk is real. Are these still core holdings, sleep well at night holdings? Yes. Are they as risky as something like an Altria? No. Risky as something like a Pfizer? No. There is some element of risk. I love buying my favorite core holdings when they're down in price, when there's an element of risk, but when my judgment tells me that they can overcome this risk, that they can move past this hurdle as they have decade after decade in the past. And so those are the 3 new stocks that are on my watch list, on my buy list right now for the rest of 2024 and for 2025. And I'm adding those to the stocks I've previously mentioned in my last few videos. And I'll link to those other videos in the pinned comment below so you can check those out. Thank you for watching the video, everyone. And one thing I do want to mention with any of these stocks I talk about is these days, whenever I see a buying opportunity, whenever I get excited, oftentimes the buying opportunity, it just disappears pretty quickly. And so I hope to actually move here pretty quickly in 2024. I might get ahead of myself a little bit, and make some buy orders just to lock in some of these prices because I never know if they will disappear. I don't know how long it will last, but so be it. You know, I'm in this for the long run, and usually something of quality in my portfolio is always on sale at one time or another. But I'm really excited now because all of these stocks, all of these core holdings that I want to add to, especially Realty Income, I've been waiting for this opportunity. They are on sale. Please click the like button if you enjoyed the video today. It means the world to me. And please don't forget to subscribe as well. Before I go, in terms of a full disclosure, I own the stocks in the ETF mentioned today. I am long, in terms of full disclosure, SCHD. I am long Altria, ticker MO. I am long Pfizer, ticker PFE. I am also long Realty Income, ticker O. I am long Johnson & Johnson, J&J, and PepsiCo, ticker PEP. I own those in my personal dividend stock portfolio. Before I go today, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my opinion here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Please do consult your licensed financial advisor before making any financial decisions. I'm just sharing my journey here on YouTube for fun and entertainment. I always, as always, have additional disclaimers, disclosures in the video description below. I love you all. Thank you for watching. I can't wait to see you in the comments below, and I'll see you in the next dividend stock investing video. And I wish you all a Merry Christmas, Happy Holidays, Happy New Year, everyone. I appreciate all of you out there, and I'm wishing all of you an amazing holiday season. Thanks for watching. I'll see you in the next video.